Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we're navigating digital finance all together. Got a big show for you here, guys, tonight. We have all of the outcomes from Davos, but more importantly, big moves happening in the markets. Unfortunately, not for Bitcoin, but oddly enough, gold and silver hit new all-time highs yet again, $5,000 gold and dang near $120 silver. Copper futures are also still staying up there, not climbing quite as hard, but still at very elevated levels. And then additionally, we have a bit of a juicy clip for you guys at the end. The New York Stock Exchange is already saying it has infrastructure for tokenized equities. So that 2 to 5 year prediction from Scott Bessent in the past might have even been a little conservative. All that and more. We're going to be talking about that tonight. But more importantly, we're so excited to be here with you guys. I'm your host, Zenith, for the evening, and I'm joined by an excellent cast of characters here tonight. Up first, Tracker. How you doing, buddy?
Doing well, man. Ready to get into it, as always. Like we were saying, might want to be looking at what's going on in Davos. I'm looking at a lot of good information coming out of that.
Absolutely. I will say, as the precursor to the Davos talk, I think they changed their tune on crypto, and that's kind of the big story for this one. We got clips, we got tweets, but we're going to be talking about all that and more. Outside of that, we got our third chair of the evening, Dace. How's it going, brother?
I'm well, my friend. I'm well. Yeah, look, it's I know you'd mentioned also covering some of the stuff that happened in Davos, and yeah, you've had an interesting dynamic at Davos where you've got Larry Fink advocating for crypto, and then the other participants not being quite so excited. So we'll touch on that later, but let's talk about the big green candles first.
Oh, absolutely. I guess one little order of small business. Did you guys actually get snow from this winter vortex? Because I got like an inch.
I did not. I'm in the deep south of the U.S., so they did threaten it, but no, none thus far.
I don't know. I was disappointed. It felt like a letdown. It was whole lot of panic for a whole lot of nothing. But what else is new, you know? Alrighty. Well,
always moved to Boston.
That is a choice, all right. I went to school in Connecticut, and I had the experience of once the snow came, it didn't leave till like March or April, and it was just cold and bitter, and just you stared at those snow piles because you knew they were not going anywhere. But, you know, what can you do? Alrighty, gentlemen, first order of business of the evening. Who loves gold? Bad reference? All right, very well.
Peter Schiff is in the chat.
Yeah, there you go. Gold is up to $5,000 on the day. We just had our daily close. And then additionally, silver, let's see that price, currently sitting at $109 per ounce. So one of the big stories that I was kind of watching as the day progressed is that people were saying, oh, wow, there's a massive sell-off. And it was like, last time I checked, this right here, that's still a green candle. So let's go towards the smaller time frames. Well, pretty much what happened was we went up and then dropped down and then recovered. So at the end of the day, it was like, is it a pullback? Yeah, sure. I just see that as like some folks taking profit. Volume, though, looking pretty strong. This is the 1 hour chart even. Volume looking pretty strong for the day. On the daily, our volume is definitely a little bit broken, but oh my gosh. Yeah, talk about parabolic. It is up there for sure. So I guess here's the question. Why? Why the move up? Why the correction? Why people care about the correction? Like, are people actively looking for this to top out at some point, or is this train still rolling? Like, it's got a ways to go. What do you guys think?
Well, it depends who you ask.
Yeah, there's combination of factors. Like the DXY has broken out to a pretty serious multi-year low, so the dollar's not been worth less in quite a while, historically speaking. And so, yeah, I think, you know, the currency debasement is the reason, right? It's always one of the narratives around any precious metal rally is indecision, fear of war, and currency debasement. And so I know you mentioned something in the green room about nations backing, right, their reserves, and people. There are lots of folks on the global scale that are moving their reserves away from the dollar and into gold, which is why you've got, you know, dollar pushing all-time lows or local lows, and the gold never been worth more. Cracker, what you got, bro?
Gentlemen, hats off to you on that one, because you guys were actually the ones that were catching that story a while ago, talking about China buying up gold to possibly have a currency backed by it, and the levels are looking quite high. I got another tweet here for you, or the first tweet of the evening. This one coming in from Bar Chart. The dollar's role in global reserves is withering away. Greenbacks are under 50% as gold's weighted average soars. So what we're looking at here is global reserves for different currencies. The black line at the top, it's US dollar. That gray zone, that's gold. Euros is the brown in the bottom. Yen is the dark red, and pound is the pink. But yeah, gold appears to be taking over the US dollar when it comes to global reserve.
Yeah, there's a lot of narratives here that are kind of coming all at one point, all coming connected at the same time. So we've had the long-term gold bugs, we've had the long-term, that just feel like that should always be a percentage of your portfolio regardless, because it's always a safe haven against uncertainty. So a lot of people flock to that for that reason.
Yep.
Then you add into the fact that, like what Dave was saying, the reckless spending by the Fed and just printing more money, devaluing the currency. Keep in mind, more money's been printed, in the last 5 years? That's 80-90% of the supply. It's something ludicrous of that nature. So that also now has pissed off the rest of the world, because most people, it's the world currency. And then you throw into the fact that what the recent events that just transpired with the U.S. going in with the Venezuela takedown and others going against the petrodollar, which is backed by the U.S. dollar, how they trade crude. It's enough there for the BRICS have said enough is enough. Now this is basically now that adds to the fire the retaliation of stopping those dollars. The digital yen was what the Venezuelan government was trading their crude oil in, and that's what they were backing it into I made that from happening. And then now you even got more talks about political things like the United States looking at strategic reserves in Greenland and things of this nature, which leads to more uncertainty, which just feeds the whole loop again. So you're just having all the perfect narratives for why people are flocking to gold and silver. Personally, I think it's a very crowded trade now, and gold and silver does not move this parabolic like it has. Now, if you do believe in the fourth turning and that concept where there's rise and falls of every big world currencies going back to 2,000 years ago, that this is the end of the US dollar's reign. And it's pretty much always done by the same way. People start just recklessly spending that capital, devaluing it, pissing off the rest of the world, and then this leads to uncertainty and then people asking for a new change. Most of the time that does lead to war, at least in the history. Hopefully it's not going to be, history won't repeat in that aspect. Nobody wants to see that, but at the same time, people are starting to move to what's got more certainty, and that is gold and silver, because yes, there are miners, there are people pulling stuff out of the ground, but certainly not devaluing it as quickly as what the US dollar has been devalued. To put it in perspective, I think I saw a chart one time, it kind of made it simple for everybody to understand. If you look at a dollar, what it was worth, say in 1910, 1920-ish time frame, we'll say during that time, it was worth $1. Now it's worth about 8 cents. That's about the best way to kind of, if you really want to look at the value of what the underlying dollar can get you now, and that's about what you're looking at. Gold will always be a safe haven. People will always have it in their portfolios, but for all the other reasons I just stated, it's just feeding that. It's just another reason people to flock to it. And then Dace, I know in the green room you stated something too, which I thought was really interesting too. It's another take that if there were big people that were positioned, like banks and others that were positioned to short, now this is also feeding into it as a short covering. Thus why you're getting such an exacerbated move so quickly, even more faster, it's speeding up. And that's just feeds into the more of it. So are things going to clear out? Personally, if I had silver, not financial advice, but if I had silver and gold positions, I would be absolutely taking I would be taking profits up. Now, you don't have to undo it all, but I think you're reckless if you haven't been taking any profits at this point on an asset that barely ever moves like this. I think you're just being greedy, and unfortunately, I don't think it's going to end very well for you. I would at least start, taking some responsibility and taking some profit off the table. Something, I don't know, just something, take it off. But that's my 2 cents.
I think that if your strategy is to do rotations to take profits, then yeah, that makes sense. But honestly, for a lot of folks, I think they see gold and silver, especially as the things that you just buy and hold forever. And from that strategy, I think it does make sense. When I'm looking at this chart here and all the news that we're getting, I kind of see two things. Number one is that there was speculation today, and like only today pretty much, about like, people are rotating out, maybe it's going to go down, and then it just jumped right back up. But outside of today, it's been pretty much just that parabolic rise. And then I was looking it up earlier. Global production of gold has been increasing just like slowly but steadily over the years. So it's not a supply issue, which means it's a demand issue. And when I'm looking at this and how steady it is, what I'm seeing is that I don't think this is people speculating and trading. I think this is people actually just buying it up for the value that is intrinsic to gold, which is just being that safe haven, meaning that I don't know if people are going to be rotating out of this stuff.
No,
And then,
I agree with what you're saying, but I'll pause right there just for a second.
Yeah.
And that is, most people who are buying in but institutions will absolutely be looking to take profits, and they're the ones that can be the market makers. So that's why
correct.
I'd be hesitant on certainly adding to any positions here. I think is crazy. People that are out there loading up on silver and gold now, where were you 2-3 years ago? Like that was a time to start doing it, not now. You know, and if you want to keep, that's okay. I'm not telling the people to get rid of all your portfolio of it. I'm just saying take something off the table in case it does have a nice correction. At least then you can get in another entry, and it also helps you, stomach a pullback, and so you're not kicking yourself later down the road. That's all I'm saying. But if you really want to look at silver's price action, that one, you want to talk true parabolic. That had just gone parabolic since, a very short time. We're talking, I mean, it
Last
had its
3
break.
months,
It
effectively.
had its breakout. Yeah, since December 1st. It's just gone straight.
I would argue you could almost pinpoint it back to maybe like June or July of last year, because that's like right here on the charts, because that's kind of the levels that we had back in like 2020. Get up there, test it once, have a pullback, but then once you hit June and July, that's where the ramping up really starts. Granted, it's parabolic, so at the beginning you're like, oh, cool, we have some gains, and then it takes like a couple months after that where you're like, oh, this thing's not slowing down; it's only going faster.
Correct. Now look at the daily. Look at the daily volume. If you switch to the daily, there was one in here. I was looking at something totally different, but the volume was massive. On what chart you're looking at? I think I'm looking at the SLV. It's an ETF that trades it. That's what I'm looking at, and that had a monster spike.
Yep, that is a monster spike.
I mean, look at that volume. You scroll as far as you can't get it. So that, to me, that's institutions ETFs right there. Like you can't find anything remotely close to that except for maybe back in 2021 January.
Yeah,
and even then, that's still smaller. So I'm just saying that's something to be, people that are in this. I mean, it's just something to kind of to watch, and be careful. So
yeah, I think that when it comes to what's going on, why more demand for this? I think the answer is that it's like you guys pointed out, US dollar, the DXY, the value of it, it's down. I want to say it's down about 10% for the year in a time period where we're up about like 5.5% for GDP. But the reason that the dollar is falling, we're printing more and we're spending more than ever, but also the interest rates I think are playing a factor into it, because the bond markets are not going to be as strong as they have been over like the last 2 years when we had those higher interest rates. And right now we're looking at what is it, 2 more interest rate cuts for 2026 potentially, and even more if Trump gets his way with the new guy he's going to be putting in there in May. So based on that, bond yields are going to be going down. The yen carry trade is pretty much over. The Japanese interest rate is up to 0.75%. It's no longer zero, but still at the same time, 0.75 is not bad. But what they were doing was pretty much taking out free money and just using US bonds to just guarantee 5% a year on that. Granted, when you do it with $1 billion at a time, that's a lot of money, and that's gone now, which means that people are looking towards the other stuff. I even saw some articles saying that they actually see that gold as a risk on asset in these current times, because they're like, look, more people are going to want gold as a store of inflation, or as a store of value against inflation. Therefore, there's an increase in demand. So if we can speculate against that, we can make money by trading it. And I'm like, that seems like a real leap in logic away from what gold traditionally is. But a lot of it comes back to this entire ecosystem that we have going on, which is that US dollar value down, interest rates going down for the US anyways, and then liquidity is still going up at the same time. So people are looking for the safe haven, and people are also looking for places to speculate. I think it does kind of beg the question, especially to the 3 crypto bros here tonight, which is, okay, if that's the case, then what's Bitcoin doing? Why is this not going up the same way as well?
Well, hold up. Before we answer that question, let's put it in
Okay.
perspective now. Gold is now currently at anywhere between $32 to $35 trillion market cap. wrap your head around that. We've been talking how it was always 20 million. Now we're talking that high. Silver now is $5 to $6 trillion market cap. So silver is roughly what? Where's crypto at right now? What its market cap right now?
Bitcoin is sitting at 1.7. I want to say total crypto market cap is right around 2.93 ish.
Okay, we'll say 3. So it'd have to double to be the size of silver right now, which crypto surpassed silver a few years ago. Now here it is, silver just has doubled the amount of volume. Personally, I mean, there's a good point that you could now, like we've seen that rotation. You're seeing everything rotating down into other assets. So the question would be, is it ever going to rotate down into the crypto market? And the reason why I'm saying, I know we talked in the green room about it, I still think it's easier to manipulate and suppress a market that's only 3 trillion versus some of these other markets. And crypto's fallen out of love for a mainstream. Everybody's seeing it on mainstream as far as gold and silver being a safe place and a haven. And it's always been, so it's been around longer. It's got more clout behind it for people to rotate and go into it. And it's been more trusted because it's been around for much longer. So I think that's why you're seeing such a big parabolic move to there. This entire environment should benefit crypto, but it's not. So is it a combination of that? Maybe people aren't really looking at crypto. Maybe it's falling out of love a little bit, and at the same time it's just easier to suppress because of other things we've been talking about, the Clarity Act and other things, and it's also competing against the banks, which we'll dive into as well. So all of those things could probably fall into reason why crypto has not moved. Keeping in mind, everybody wanted ETFs in crypto. Well, we got them now. Now it's easy to suppress the prices and hold it down. It's not a natural organic market anymore. So there's a lot of things that are in favor for why crypto is just not moving in the direction we want it to be moving. I can make a strong case. If we didn't have ETFs, I bet you crypto would be a lot higher right now.
You know, I think it's entirely possible. I think so, yeah. I to try to give the simplified version of this. So we're seeing gold and silver prices go up. I think there's a demand for them, both from like technical use, whether you're silver or gold, being used in technology and aerospace products and stuff like that, but also just the store value. The reason being US dollar values goes down. Okay, so why not Bitcoin? If the great narrative is that Bitcoin is digital gold. I don't know if the narrative has quite caught on yet, and I think this might be some of the proof for it, which is that people still view Bitcoin as very much more of a risk-on asset as opposed to store of digital value. Because volatility, I think, is still definitely baked into Bitcoin for sure, but definitely crypto overall. So because of that, I think that is a reasonable answer to the question of why is Bitcoin not... Bitcoin is designed to be secure money. Why is it not appreciating at a time when gold and silver are going parabolic? People still view it as a risky asset inherently, and the volatility has not gotten out of it yet. And honestly, it's probably not going to get out of it for, call me crazy, but like 10 to 12 years.
No, I agree. Crypto 100% is a riskier asset because it's new. It's a lot of people don't like to invest in something they don't understand. So there's that part of it. And with a small market cap, it can be much more volatile. So that's another reason why it's a riskier asset. But then I have to pose the question then, well, the Russell 2000 was hitting all-time highs just recently over the last couple of days. So, or on Friday or Thursday, it was hitting all-time highs. So why is the Russell moving with very riskier low cap market cap stocks? Those are moving, and yet, you know what I mean? Like everything's moving. So I'm not disagreeing with you. It's just that it just feels like it's being suppressed. It just has all the makings of it being suppressed because you've almost run out of all this. I'm not gonna say you've run out of sellers, but I think you are kind of getting to the point where you've exacerbated most of your sellers. I really think you have.
I see that.
And maybe it just needs something like the Clarity Act to get passed, which I know we're going to talk about, to give it its momentum to kind of push through some of these recent technical levels to kind of bring back some more, steam behind it. And if people and institutions are rotating, taking some profits out of gold and silver, they're gonna be looking for the new thing to move into. And if the Clarity Act thing gets passed, that might be the dinner bell ringing more or less for the investors to come to crypto.
True, very true. Alrighty, tell you what, how about we do a quick transition to one of our other big topics for tonight, which is what happened at Davos, aka the World Economic Forum. So, got a quick article here from Cointelegraph. Crypto takeaways from Davos. Politics and money collide. Crypto's public image featured prominently at Davos, but central bankers at the World Economic Forum in Davos warned that it threatens monetary sovereignty. All right, let's see what we got. While geopolitical tensions in the Greenland standoff set the tone at Davos in 2026, crypto resurfaced as a secondary but consequential theme. U.S. President Donald Trump used a few minutes of his Davos speech to double down on his ambition to turn the U.S. into the world's crypto capital and voice support for crypto-friendly legislation. His tone was different from central banks. In a panel with crypto bigwigs, the governor of the Bank of France criticized private money and yield-bearing stablecoins while promoting central bank digital currencies. Crypto consensus did not emerge in Davos, but a visible point of disagreement did. U.S. political messaging framed crypto as a geopolitical asset, while at least one major European central banker warned that private money threatens financial stability and sovereignty. Okay, well, tell you what, I actually have a little clip here for you.
Keep that in mind. European central banker. Just keep that in mind. What area of the world it's coming from.
Correct.
To unleash innovation in savings and financing, I'm also working to ensure America remains the crypto capital of the world. And to that end, last year, I signed the landmark Genius Act into law. Now Congress is working very hard on crypto market structure legislation, Bitcoin, all of them, which I hope to sign very soon, unlocking new pathways for Americans to reach financial freedom.
There you go. Wasn't the key point of the speech. Neither was the part where he made fun of Gavin Newsom, but we still got good clips of both of those. The larger point, though, goes back to the article here, which is that we had a lot of crypto folks coming up here, and we also had a lot of bankers coming up here. And it honestly kind of went 50-50 either way, depending on who you were listening to. So Trump was talking about the Clarity Act and stuff like that, but then we also did have the French central banker talking about money sovereignty. But realistically, there's more than that, because Binance, CZ was even heavily featured at this panel as well. He was talking about tokenization. One of the clips that he had was saying that Binance is so large, it is larger than some of the big banks in the world at this point. So he views crypto exchanges at the same level, if not somewhat larger than the average bank in the world. Granted, there's only a few of them that are larger than Binance at this point, but it's interesting that he's kind of coming out there and just trying to throw his weight around a little bit. He did also have a bit of a prediction future, or where have we been? He said that the few things that have gone really well for crypto so far have been central exchanges and stablecoins. And things that they hope happen are payment processors, but he thinks that those have kind of been failing. Tokenization. And yeah, so that's pretty much it for CZ. But then if we get down to the bottom here, what Davos revealed about crypto priorities. Public image for stablecoins was badly tarnished in 2022 when the Terra ecosystem suffered a multi-billion-dollar collapse. The failure began with Terra USD, or UST, an algorithmic stablecoin backed by the network's native token, Luna. Stablecoins have since flipped the narrative. It's now an important topic in the annual meeting of the world's most powerful voices in geopolitics and economics. Even central bankers who are generally critical of the crypto industry acknowledge them as core themes to watch alongside tokenization. Davos 2026 reinforced stablecoins and tokenization as part of the year's policy conversation. The U.S. executive branch and Europe's banking sector remain philosophically divided on approach, and regulatory developments are still constrained by domestic politics. So, overall takeaway, stablecoins, pretty big win here. I'd argue Bitcoin also was a pretty big win for Davos as well. The overall sentiment on Bitcoin was that it is largely a morally neutral asset that can now be used for international settlements, similarly to stablecoins. But the downside for crypto outcoming from Davos is that a lot of this stuff is somewhat dependent on policy, depending where it is. But CZ also had another good clip where he talks about it doesn't make sense to have a bunch of different nations having their own policies on crypto, because crypto is the same internationally. It's just you're regulating how the people interact with the core thing depending on where they're located geographically. So, do you find, gentlemen, coming out of this, does this seem like a win, nothing, or a bit of a loss for crypto on the world stage here?
I'll look at it like this.
I don't know that it's a loss for crypto. I would say that it's illumination of the real issue, right? Like it's this has been a sort of an obfuscated, like, people that understand crypto, they know this. They know that fiat has been debased, and that's why Bitcoin has done what it's done since the great financial crisis of 2008. The people that don't, but that are on the macro geopolitical stage, they now see, okay, there's a rub here. Like, this is not something that is a small fringe issue that will go away. This is actively affecting the world's largest financial players. So I think that is a win for crypto in terms of visibility in the longer term, in the greater scheme. In the short run, yeah, it may FUD some folks out. Say, well, let's just go buy some more of the metals because they're going up, and everybody's terrified because they're printing the dollars to oblivion, right? And I understand the sentiment, but yeah, I think on a long enough time frame, it's a positive thing for crypto because it illuminates what people who are in crypto already know.
That's true. Tracker, what do you think? Up, down, sideways?
I was just looking at a couple of things while you were talking. Sorry. Yeah, but so the way I look at it is like this. There is a big geopolitical war going on, certainly between the United States and Europe. I mean, the United States is talking about working out of NATO, things like that, which some people like or dislike. Some people don't like the idea that the United States is talking about buying Greenland. People don't like that. So there's a lot of uncertainty right now with the powers that be who are trying to keep control on all sides. All the big players in the world are trying to maintain that control and make sure they're positioned. And I think it's very interesting to see the theater that came out of Davos, being the power struggles of the new innovations, the new guys on the block with technology, and the old traditional banks. And I find it interesting, very interesting to watch it unfold. Keeping in mind, Davos is in Switzerland, correct?
Yes.
The BIS is located also in Switzerland. In Basel, Switzerland, is where its headquarters are located. That's not by an accident. Switzerland is definitely the headquarters for the world financial institutions around the world. BIS is the big boy in the block.
Swiss bank accounts are famous for a reason, my friend.
Yes. So the BIS is very large. Now, they'll always say the Federal Reserve is not necessarily connected to the BIS. And I'm not going to sit here and argue this or not. But what I'm getting at is there's a big power struggle going on. And I think some of the institutions are ready to move into the crypto. The United States is definitely going full steam, at least with this current administration. New administration takes over, who the heck knows what may happen. We might do a complete U-turn and go back the other direction, which is scary to think. But right now, it's full steam ahead towards crypto. And that's why the Clarity Act we're going to talk about is going to be very important to see, because you can tell the European bankers do not want this to happen. They don't like it. They're probably the least favorable of it all happening. And the BRICS, I think, are also interesting enough or kind of against. So it's interesting. You almost have three parties now. You have Europe, that's the old financial institutions that are fighting it. United States and other institutions are starting to work together to try to launch crypto and kind of bring it to fruition, trying to partner with other players around the world. Meaning, when I say players, countries, big institutions, things of that nature. Then you have the BRICS, or its own thing. So there's almost like three different power struggles going on around the world. And it's interesting to see. Now, the BRICS are certainly in favor of crypto, and the United States and its partners seem to be in part favor of crypto, but Europe seems to be out of favor with it. At least that's my perception on it. So is it going to come to fruition? I don't know. But I know the BRICS have eventually been trying to drop the U.S. debt and by treasuries and been switching over to the hard assets, which also feeds into the gold and gold bugs and things of that nature on this pressure. But what came out of Davos, I think we're going to move to central exchanges. That's going to happen regardless. Why? Because tokenization. That's why it's going to happen. And it's going to happen because it seems like the WEF has been speaking on it. The WEF, Club of Rome, these they are basically like think tanks that push ideology. And this is why they meet in Davos, because they want to get everyone's opinion, kind of talk and strategize this. And the main focus was around tokenization, crypto, and this and such. So if the big powers that be are moving in this direction, if you're a big player and you're not with them, you're against them. So I kind of feel like if the United States is with them, that tells me everything I need to know. It seems like the tokenization, United States, and things seem to be moving in that favor. But other things came out of that little caveat that came out of Davos that I thought was very interesting. So when Trump came out there, he was saying how he does not want large institutions buying single family homes. I know this isn't crypto related, but it just shows you how not everyone's 100% on the same page. So if you talk about tokenization and other aspects, I'm not gonna say who they are, but they want that control. They want about allow institutions to buy up single family homes and things of that nature. But at the same time, I thought that was very interesting that him coming out saying that he was against it. So what I'm trying to say, some items they agree on, some items they're not going to agree on, and I think this is going to be the power struggle that goes on for a long time. But I think I think Europe is the one that's kind of almost left out right now as far as the big move with crypto is what it feels like.
I would largely agree with that one. Obviously, the three of us are US based, so we're not exactly experts on European policy, but the overall sentiment that I'm getting is the same thing exactly, which is that it seems like they've always been steps behind when it comes to crypto adoption and regulation. And now we're getting the French bankers like openly talking about CBDCs and being like, no, this is the way, not those stablecoin things. It's like, homie, you are fighting for the bad guys on that one, in my personal opinion.
But remember though, like, so Germany, one of the big country, it dumped all of its Bitcoin, right? We know that one. But remember
fumble right there,
right? And something that happened about 8 months to about a year ago. Britain and England was talking about how they made comments how they wanted to be the world's home for crypto. And I remember the administration coming out, mainly Trump was coming out, it was like, no, the US is going to be the home of crypto. So they already have a clash going on. So I just think that right now the relationship between US and Europe is probably dividing more and more apart. Whether you agree with that or disagree, it's irrelevant at this point, saying that's what's happening now. Could it come back because of a new administration? Certainly could. But right now, I would be more in favor, personally, for myself. I want to see more crypto come to fruition than traditional banks. And I think, like I said, we're going to get into the clarity and other stuff, but power struggles.
This is a very important topic, though. I think that one of the things that we saw in Davos this year was more power struggle than we've seen in past years. Because usually in the past, they're all in agreement. They're talking about all the pushing AI and you'll own nothing and be happy stuff. But this year we actually saw some disagreement, and we saw a good amount of news clips of people that are coming out and taking shots at each other. Brian Armstrong had a clip where he was legitimately just going after the banks, talking about how they can use fractional reserve lending to effectively just lend out your money without your permission, versus crypto exchanges like him at Coinbase. They have to have 100% reserves for stable coins that are put in there and stuff. And then additionally, I think Eric Trump also had a big clip criticizing
I was just about to say it.
Yeah. And then, I mean, shoot, I got Brian Armstrong.
Well, hold on. So what Eric Trump was saying there was basically he was saying how the banks are absolutely holding up the Clarity Act because of the yield on stable coins. So he called him out right then and there.
Yeah, that's a big one. There was an interesting one that came out though, which was David Sachs. We showed this clip last night on DJ Roundtable, but what he was talking about is that he's saying that there's a possibility that the banks get into the stablecoin lending business, is that they, instead of just trying to keep the monopoly, if they're forced to have to allow yield on stablecoins, they're going to jump into it themselves and become part of that ecosystem. David Sachs did also have a bit of a caveat there, saying that like they are fundamentally different. One is fiat, one is stablecoin. They are different assets, so they have different regulations. But like theoretically, hear me out. What happened if the banks just got in on the game with you?
Well, they will. I mean, no, they're absolutely going to do. But I think what they're trying to do is they're trying to see how much power they can control. They're trying to hold everything up and see as much as they can possibly get. Once everything falls into place, they're going to react quickly. 100% it's all about hedging your bets. And absolutely, they will come in with all the products out there and they'll tell you, don't worry about going up to all this complicated crypto. Just come to us and we'll make it simple for you. But of course, they're not going to tell their consumers that they're taxing them as the mediator, right? So say you're getting 5% yield from them, you might get 2%, maybe 3%, and they're going to take that extra cut off the top. I mean, let's call it, because they have something that crypto doesn't have. They have all the customers. So they just need to make sure they can retain customers.
Yep. If you'll recall, when the Trump administration first started, I was constantly posting, the SEC has announced that banks can now, offer crypto products to their customer, and like they cleared the way for the banks to act in the crypto space now before the Clarity Act was passed. And so I think that was very wise on the parts of the Trump admins, on the finance and economics end of things, because now going forward, the banks can't sort of cry foul. It's like, no, man, like, you can offer these products now, today. And in fact, now it's just more clarity. So there's more reason for your customers to be interested in them. You just can't continue to scam them for however many basis points. You've been scamming them for the past however many hundreds of years.
Yeah, what a bummer. They're very sad about that part. But
you're absolutely right, man. They are protesting, and then on the other hand, as soon as the protest falls flat and they inevitably lose this battle, they will fight the next one, for sure.
They will, but okay, let's be clear here. When you have this much control in place, they have their own think tanks, trust me. They've already got plan A through Z ready to go based on any moment that they need to pull a lever. They've got it pulled. Like, they've got endless supplies of assets. They're going to protect the kingdom. But to go back to what I was saying on the BIS, for example, so they're made up of 63 membered central banks representing 95% of the global GDP. 95%. So I just find it interesting that the head of the financial institution is in Switzerland, and Davos is always there with the think tanks who is there. So people always want to know, where's the financial hub in the world? It's Switzerland. It's always been Switzerland. So I just find it all being interesting there. But you definitely want to be on that side of trying to win those parties. That also includes the IMF and others there as well. But you definitely want to be in connection with them, because if they're on your side, what you're going to try to do, and the crypto has won them over, it's going to happen. It doesn't matter. Anybody else that's in the way is going to get steamrolled. So it's almost irrelevant.
Yeah, I think that's a fair analysis. Alrighty. Other thing that came up at Davos, largely from the US folks, but we got this guy. U.S. bank lobby states that fighting stablecoin yields is the top priority for 2026. UBS enters crypto, BitGo IPO on 25th January. All right, we really only care about point number one here. So the American Bankers Association just released their 2026 Blueprint for Growth, outlines key policies. One of the most important bank lobby groups in the U.S. announced that its top priority for the year is to ensure that crypto firms don't pay yield on stablecoin deposits. They state that their goal is to stop stablecoins from becoming deposit substitutes that slash community bank lending by prohibiting paying interest, yield, or rewards regardless of the platform. This is perhaps not a surprise after a recent study stated that $6 trillion in bank deposits could switch to stablecoins, thus seriously affecting the profitability of these banks.
Oh, they absolutely would. I mean, so my question here is,
that was released the day after the Clarity Act was shot down, correct? That's when this was put out.
21st of January. That is.
Yep.
Believe so. Yes, sir.
So
yeah.
Here's the thing that I find interesting. So the banking lobbyists don't want this to happen. So what is your argument outside of just strong arming the legislation in the United States?
We just heard it.
We just heard it,
Tracker. It's the poor community banks. That's the victim here. The community banks.
Oh, the community banks will be compromised. Is that what I'm hearing?
Mm-hmm. That's what he said. The community banks need to be protected because up to $6 trillion, could move away from deposits. And it's like, what do you just total up the whole community banks?
Right.
Grand total deposits. Like, this is the threat.
Here's what I think is going to happen. This is my 2 cents on this, and I'll let you talk, and I'll shut up. I think what's going to happen is this. I think they're going to fight it a little bit. It's going to get through, and once it does, you're going to see the banks start partnering or even consuming and buying certain central exchanges and starting to really take hold of it. So then they've got their lion's share. That's typically what ends up happening. So the threat's out there. They're trying to stop the innovation, and if they can't stop it, then once it does go through, they tend to buy up their competition. And I think it could be something like that end up happening. But there's one area they can't buy up, and this is why I think DeFi is so important, because you can't buy up DeFi because it's like trying to say, yeah, I'm trying to capture the air. I'm trying to stop wind. You know what I mean? That's the thing why it's so critical. So if they want to go in here and shut all this stuff down and try to, listen, that's capitalism, love it or hate it. It's got pros and cons, certainly. But if they do come in there and try to stymie that, shut it down, then users need to be more aware that there is alternatives out there called DeFi. As long as Clarity Act and all doesn't stymie that, the United States got to be careful. You can't just say, oh, we're going to shut down DeFi. All right, cool. So all these other countries that are going to allow it to come, they're going to rise to power, because when then large people with lots of money start looking at this saying, where's my money treated the best? That's where they're going to go.
Very true. And by the way, the answer to your question actually came out of David Sachs for why do the banks oppose this? Well, we'll see if this sounds fair or not.
A good compromise is everyone leaves a little bit unhappy, right? But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
will they be regulated
their opinions are going to evolve over time. And I bet you over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But will they also be regulated the same way? And I guess that's a big, I mean, the banks will say, hey, if they get to do all the same things we do, how come they don't get regulated the same way?
Well, I guess because they're offering slightly different products, right?
Yeah.
So, but I mean, everyone offering the same product should be regulated in the same way. And we want to get to that harmonization.
So there you go. That's the answer to that one, which is the banks.
I didn't see the clip. I didn't see that clip, but I agree with them 100%, obviously, because that's what I said. That's exactly what's probably going to end up happening.
Yeah.
I've not seen anybody's theory on that, but that's typically what happens with large institutions. They take out the competition or they partner with them, and then so they can reap the rewards.
Yeah, but the argument on its face currently is that the banks are kind of crying that it's not fair, which is, why are we regulated and they aren't if we're offering yield and they want to offer yield? If they want to offer yield, why aren't they regulated the same way we are? And well, the kind of softball answer to that one that David Sachs gave me there is, look, different products, different rules. So it's competition, yes, but it's competition through a similar but not same asset. That's the answer on that one. Personally, I happen to think it's a very flimsy argument, largely because it's like, yeah, we all see that it's competition. Like, and you're trying to stave off the competition. I get it. It's the young up and comer trying to disrupt you. And you have had a monopoly on this stuff for dang near a century, if not more than that at this point, thanks to the old Federal Reserve going on there. So I really don't see good arguments for not letting stablecoins have yield, other than just the classic Gary Gensler or their hucksters, fraudsters, and scammers. It's like, no, we've progressed past that point. We are developing legitimate guidelines and legitimate rules for all these different things. And that's what the Clarity Act is going to do. It's going to create clear definitions for who does what exactly is a digital commodity, a digital asset, all that kind of stuff. So the landscape that we've been operating in up until this point, honestly, has kind of just been the wild, wild west. And then people coming in and trying to lay down the law if they feel they have the power. Cough, cough, previous SEC. Now we're actually getting the delineation between who does what in this bill as well. CFTC, SEC, who has authority over what. And the banks are the ones that are really lobbying and fighting against this one because they have the golden goose currently. And this is a threat to that. So it is in their best interest to try to protect it and keep that market and keep that blue ocean market that they've protected for so long. Because once stablecoins are able to offer yield similar to banks or at even better rates, because let's be honest, what interest rate are you getting on your checking and savings account? Odds are it's around 1%, which last time I checked is not covering inflation. So, just saying, got to protect it when you got it.
Yeah, I think we're pointing at the real question around all of this legislation, which is like you've said, the existing powers that be, the banking powers that be that have been in place for many, many, many decades, are butting up against the fact that this current administration, if you look at which way crypto voters voted, they voted overwhelmingly for this. And so politicians are in a rock and a hard place. Their banking constituents are not going to want this, and their actual constituents, their citizens that they represent, are going to definitely want this. And so, yeah, it's no surprise that this Clarity Act has not come along as quickly as the Trump admin would have liked it to come.
True. So Clarity Act is the big thing that we're kind of waiting on right now. It was supposed to happen 2 weeks ago. Theoretically, it's happening this week. Well, we'll happen to see if it does. By the way, folks, please keep in mind, a lot of this stuff it's a big question mark about when it's going to happen. I believe the latest update is that it's been pushed to the 29th, largely due to the winter storms that have been going on and whatnot. But at the same time, the question is it actually going to get passed? And I want to pull up our good friend Polymarket and see.
I'm just a little shocked by that statement there. If it gets passed, that it'll reduce manipulation by 70%. Thought that was interesting. I'd love to hear more about that one.
I don't know if we're going to get an answer on that one from X, because I don't know. It's kind of the bathroom wall of the internet. But I got to say, government shutdown odds are up to 80%. As it stands currently, the Democrats are very upset with everything going on in Minnesota. So they're probably going to keep trying to halt everything until they can get some concession on that, which, by the way,
yeah, but I did see
ICE has been funded out until like 2028, I'm pretty sure.
Yeah, but the Trump administration did pull back on it. He's also pulled out some troops and stuff out of Minnesota, so to decrease the tensions there, and that's been coming from a lot of big CEO of corporations that are based there. So it's a political move to pull it out right now.
Yeah.
So hopefully that'll stymie that from being an excuse from the Democratic side. Hopefully.
As far as the Clarity Act goes, Polymarket is warming back up to the idea that it's actually going to happen. So previously we were sitting around that 42%, back up to 54 currently. It's nowhere near that 80% that we were when it was supposed to happen like the next day to go to the Senate committee for markup and voting. But at least it's moving more northwards now. So
I can't believe it got up that high, to be honest with you, because typically these things have to go through some digestion and some rejection first to make sure people are going to get what they want. Especially the banks involved, come on. They're going to push back. I'm not surprised they didn't push back. Like I said, the only thing that I was questioning last week we talked about was the tokenization, which it seemed like they just needed there were some scenarios they needed to have. Okay, how would this work? Type thing. I think they just needed some more information about how that would all work within their industry. So that was understandable, but the big one was really the yield on the stable coins.
That is true. And gosh, I want to say that we also.
But when are they supposed to vote? When this week are they supposed to vote?
So markup and voting potentially doesn't mean you get both, but theoretically we get markups on the bill fully released, meaning that, well, we could get it on Thursday. It sounds kind of odd, but theoretically it could be to the president's desk before the end of the week. That's
okay.
Aggressive, but
yeah.
President Trump is in alignment to see that happen. And, well, the Republicans currently control the Senate and the House, and right now it's just in the Senate. So as long as it doesn't get marked up too far away from the bill that was passed in the House, and they have to reconcile the bills to get them to match, then it could move really fast. But at the same time, though, it's government. There's a lot of ifs. We don't know everything. A lot of the stuff happens behind doors, so we're not going to get the answer. But theoretically, this could be a very pivotal week, not just because of but also because, keep in mind, Federal Reserve meets this week. Now, odds are that's not going to be changing. I believe where it is, FedWatch, that's the one. I want to say it's still at 95% chance of no change. Odds are it's even higher now. Yep, 96% no change. This is coming to us from FedWatch. Let's see what Polymarket has to say. Fed decision in January, 99%. No change.
Okay. And then when is the government shutdown most likely? When is their date? When's their deadline?
January 30th.
Okay. So it's
Friday. Literally
not
Friday.
Good. All right. So everything could get really jammed up here pretty soon. All right, got it.
Yeah. Here's the overall takeaway, though. So, Clarity Act, as we just saw from all the talk in Davos, if it passes, I happen to think this is going to be a big boon for the crypto industry inside of the United States. I could see this as a legitimate, good tailwind for the industry to potentially keep this market going towards the upside, which would, invalidate 4-year cycle, show that we have a bit of an extended cycle, maybe a new cycle, maybe no cycle altogether, and we're just moving towards that up into the right kind of territory. Alternatively, the Fed could say some very damning things, and then the crypto bill could get shot down, and then we could have the government shutdown, and then we could have even more civil unrest in the U.S., and that would probably not do good things to the market. And we're at a critical point when it comes to the markets currently because, let's see, Bitcoin, where are you at? There you are. We're currently sitting at what appears to be a cycle low for the 60-day cycle. So assuming that this is the low, good things coming out means that we go towards the upside. Bad things coming out means that we go test this cycle low that happened down at $80,000, $79,000. And if we break down below that, that is very much in favor of the 4-year cycle, saying 4-year cycle is over. We already had the high back in October 6th, I want to say. Yep, there you go. And then it's all kind of going downhill from here. So start stocking dry powder and wait for the bear market low to come in and try to buy up the bottom when you can. So that's why I'm saying this is an important week. Could be nothing, could be a lot. Only time is going to tell. I know. How's that for a very wishy-washy answer?
No, it makes sense. I just would like to see something come out of this that would cause us to finally break through some of this resistance that we're going through. But Dace, I know you posted something that was really interesting about Bitcoin, and it was the charts look very similar to long-term chart between Bitcoin and gold. Thought was really interesting.
Yeah, for sure. This what you've got here pulled up, Zenith, is I want to say each bear market for Bitcoin, right?
Yes, sir. I believe that this is Bitcoin divided by gold.
Right. And so when you divide it by gold, there's a bit of a rhyme or reason to it. And this is the inverse of a statement that people have heard. If you're on crypto Twitter, you hear that Bitcoin runs when gold stalls. And this is another way to say that, right? So when you divide Bitcoin by gold, you get these 14-year chunks. And it looks like, according to this little theory, we're hitting the tail end of our gold dominance against Bitcoin. You know, if time is any indicator here, which mapping gold and Bitcoin does some interesting stuff, right? We talk a lot about leverage and its effect on price from day to day in the short term, but long term, we also talk about how gold and Bitcoin are both, considered stores of value for an ever inflating currency. And so this particular metric is appealing and compelling because it tells you the rhythm in which people are storing their value, right? Without quite as much noise as the fiat fluctuations, or you zoom out over enough time, you can average out some of the short-term leverage spikes, things like that.
True. I like this correlation here, but at the same time, I think there's definitely a couple of grains of salt we got to take with it. So this is pretty much saying that 14 months after the high in this chart is when the bottom of the Bitcoin market is in, effectively. So what they're kind of trying to say here is that the bottom is already in for the next cycle. However, point number one actually came from this gentleman right here. He says it depends which chart you're looking at, because depending on which one you go for, it could be that your peak was actually slightly after, when for this one, it's showing that the peak was slightly before. Okay, if that's the case, then what does that mean? Well, let's go look at the charts here. So for Bitcoin, it pretty much means that we're looking at either the top here or the top here. Technically, the Bitcoin price is higher here, but the gold price is also higher at this point as well. The time difference between these two things is 7 whole months, though, which is effectively half of that time. So if we do want to take this chart with, good bit of healthy skepticism, it could mean that this is accurate. 14 months out is where we're at currently, or we could be at month 7, meaning we got 7 more months. If that is the case, then that honestly lines up pretty well with traditional 4-year cycle theory, because at that point, we're looking at October of 2026. And based on 4-year cycle, that would be a little bit early for the low, because we know that the lows are usually more consistent based on that theory. So we're looking at something like December, January of 2026, 2027. But at the same time, interesting stuff in this chart. And then the other thing to keep in mind here is you got to do the math, understand what is going into this. Thankfully, we only have 2 things going into this one. So we have price of Bitcoin, price of gold. Okay. Bitcoin has been a very young asset for the majority of this chart. I would argue realistically, it's only kind of like fully matured either in the last cycle or this one. But at the same time, there was a lot of shenanigans that happened last cycle. And that was largely due to COVID, money printing, hyperinflation. So as a result, we see gold really spike here. Bitcoin already kind of went up, had its double top there. But 2021, 2022 is when gold starts to move, if I am not mistaken. I just want to fact check myself. Give me the monthly. Automatic. 2022, 2020. Okay, so I'm incorrect on that one. All right. So, I'm actually correcting myself. I think this chart has more merit than I was giving it credit for. So, excellent find, Dace. Am I missing anything here, or am I
Gold, yeah,
shortchanging it too much?
gold's price really didn't start really, taking off and breaking out. It wasn't until you got to go back to March of 2024. Is when it finally broke out and started making its move parabolically. Now, keep in mind, if you go back to the Bitcoin, March of 2024.
That was a very good month. That was when we hit
Yeah.
all-time highs.
Yeah. Well, we did. But if you look at the relative price of it, that was at 73,000. Currently, it's at 88,000. Or I'll say 89 for argument. 89,000. So yeah, Bitcoin's lagged dramatically compared to what gold has absolutely outperformed it during that time. So that would be around the time if you're considering anytime around March of 2024.
That's fair. That's fair.
Oh, or I mean, and it's 14 months. I mean, saying 14 months. So yeah, you could easily see it could be consumed during that. That's more of a 2-year. If we're talking about March, it's closer to 2 years instead of 14 months. So it definitely has outperformed Bitcoin over the last 14 months, most definitely. So
Sounds about right.
So there is now whether or not it stays true, that's another thing. But I think that just goes back into, once again, you rotate out of your laggers and into your. You rotate into your laggers and rotate out your winners. And think of mine, everyone's been rotating to gold for all the reasons we talked earlier in the show. And if there's some clarity that comes out of crypto and things calm down geopolitically, then that's another reason why not to own gold so much, and then to rotate into more riskier assets.
I think it's a fair analysis. Yeah.
But I was talking about, Dace, you had one chart that I thought was interesting. It was a comparison between a long-term price chart of gold versus a long-term price chart of Bitcoin. I thought it was really interesting how they were extremely similar, and then gold broke out over a long period of time.
Yeah, there's a micro, I'm gonna say micro is maybe not the right word. There's a 4-year pattern that coincides with Bitcoin's moves, right? That's what I meant by the chart we were just looking at being an inverse of the chart tracker just described.
Oh, sorry, my mistake. You're correct on what you're
gold,
saying.
No, you're good.
I was talking about ETH. I was talking about ETH and gold chart you had posted. I thought that was fascinating. Like they looked eerily similar. ETH currently versus gold. It was very similar.
It's true. Yeah. The big cup and handle. It's delayed for sure. But yeah, look, I think if you making lots of these comparisons between, there we go.
Yeah,
that's the chart you meant, I think, tracker. Thanks, E.
That's
So what are we looking at here?
Pretty uncanny.
Yeah. You're looking at a long-term. So cup and handle patterns are common for. It's basically when the price comes back to the original, all-time highs, meets that, and then it's met with a resistance and selling. It can, basically a consolidation period, and then eventually there's momentum that causes it to break out. That's a traditional cup and handle. But some people look at it much more short term. This is a very long term. So the more long term seems to be is much more validity behind it. And in here, you're seeing where two eerily similar things. You have a nice, beautiful cup and handle. And then the cup and handle, the handle aspect actually keeps getting bumped up against resistance. And the same thing that happened with gold. And eventually it finally broke out to the upside with just violent movements. If you're looking to hopefully see the same thing happen with Ethereum, it will finally hit that all-time high again and then break out violently to the upside. But of course, the key here is the volume supporting the move as well. And that's what can get it. So, and if you think about it, if there was a lot of short positions on crypto, and you get clarity, you get this perfect storm risk on assets, rate cuts coming in, that could be that momentum that would finally, launch it into going parabolic, where, it's a perfect recipe or perfect storm for it to rip to the upside, especially if there's hardcore short interest on when you get that short covering.
Sounds fair. Alrighty. Tell you what, we got one more quick hit before we get out of here for the evening. This one, not a huge story, but a bit of a follow-up on, again, a continued narrative that we've had. New York Stock Exchange just admitted where the markets are going. All right. Well, this is the president of the New York Stock Exchange. Let's see where she says
So what
it's
we
going.
announced this Monday was that we've developed the infrastructure which allows for the tokenization of equity markets. And it brings in all of the positive aspects of a tokenized environment: 24/7 trading, digital settlement, immediate settlement, and writing to a blockchain, as well as what's needed in the equities markets, including fractional shares, trading in notionals, the demand that we've heard from customers.
This is a big deal.
It is.
Yeah,
it is.
This is a big deal to go to a tokenized platform. Do you think every market will eventually be tokenized?
I think aspects of the technology are going to seep into every market.
All right. Sounds like they're already working faster than we thought. Talking about equities going on the tokenization and blockchain method a lot sooner than anticipated. Is this a pleasant surprise, or is this maybe just hyping it up before it's ready by a mile?
Well, considering we've been talking about this for a couple of years, I mean, I'm glad to finally see it coming around. I mean, it's just taking forever. But
Yeah.
yeah,
Tie that into what I was about to say before we move on to these other charts. If you guys have these charts as they're dropping, come join Walk the Block with us, right? Like you said, Tracker, we've been talking about this for literally months, if not years. And here it is on the news. And so come get your edge here with us at walktheblock.ndf.com.
There you go. Excellent reminder there, sir. But yes, folks, if you're interested in more of what we got going on here, head on over to walktheblockndf.com, click on the membership tab, and from there you can find the sign up to our private Telegram, where inside of that you can find all of the cool stuff we have going on. Not limited to, but including our live streams, the ongoing conversations, and any questions you guys possibly have. We're trying to tailor it to anybody and everybody at all levels, because we want people to learn and grow, and that we can all work together. So the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, and Q&A. Go from beginner to intermediate to expert. So we all work together, we can all win together. There you go.
Nicely done, Z. Yes, sir. Look, you guys hear Zenith and Tracker both saying, like, yeah, Dace, you posted that chart. I feel like a lot of my contribution to Walk the Block is just curating alpha to drop in the Telegram specifically. And so consider it. If you guys want to be a part of those conversations, I think that there's value there.
Agreed. And I think a good chunk, if not all of our folks inside of there would say that, yes, they have at least been able to form some good strategies and already take some profits on some moves that they've made, thanks to the information that we've been aggregating in there. But, nothing we say here is financial advice. Still got to do the work yourself, build your own strategy, understand your risk profile and what you're willing to stomach. But if you can do that, you're already so many steps ahead of just the average folk that heard on the news, Bitcoin's going up, should buy some. It's like, there's more to it than that. Alrighty, tell you what, gentlemen.
For sure, 100%.
Final
Tracker, I cut you off, sir. Tracker, what'd you have to contribute?
Oh, nothing at all. I mean, you guys basically clearing it up as far as I was going to talk about. So it was good stuff. Yeah, I just thought that just all the charts that we do talk about and strategies, it's just been kind of this lull period that we've been in. And I know everybody's just like, okay, so now what? What do we do? Well, it's hard to really get any strategic. Like we're in this waiting period, unfortunately, because we're hostage to TradFi and this uncertainty. But you're at the cusp of I forgot what was her name. What was her name? She's always on CNBC, but she's correct. It is huge news if they tokenize everything. They're changing the entire markets of how they've always acted for quite some time. This is a massive upgrade across the board if they move to tokenization. And you notice how she didn't say, did she ask her the question, did she expect all the markets to transition to that? And she was talking about a lot of different industries. She thinks it's going to change everything in the industry. So that's the same that we've been talking about, because once you can tokenize everything, I mean, you start to get rid of all the paperwork. You get rid of a lot of stuff, a lot of this, lag time. The fact that you can trade markets 24/7 now, and not just, now it's not just the currency markets or trading the crypto markets. Now you can trade all assets, 24/7, and it never turns off. So it's going to be interesting. There'll be pros and cons of that, of course, but yeah, I mean, once they move into that asset, I think it's going to be huge. I just want to see the Clarity Act get passed. I think if that gets passed, and I want it to get passed, keep it in mind, I want to get passed with none of this mucking around with DeFi, and I don't want to see it mucking around with any stablecoin yields. Those two things get passed, we will rip, because now you've got, the banks already have the green light. but this is what's been holding them back to strategically as large corporations to start funneling their assets and resources and time. It's going to be an absolute monster storm run. And if you can add that to the fact that the new Fed is coming in May, rate cuts are going to, I still think they're going to catch a lot of people sleeping. How we've only got 2 rate cuts expected for this year. I think that's going to be more this year, especially with the more aggressive chair that's going to be in position. And that was the reason why he was selected. And then you add in the fact, because keep in mind, we haven't talked on this in a while, but obviously we beat up for a while with the U.S. debt and all the debt that's around the world. They want to refactor that debt, lower interest rates. Well, and of course, it's a good political move because then it allows people who have mortgages to refinance lower as well, those kind of things. So you add that into the fact that you got an aggressive rate cuts, you have clarity in the crypto markets, and you have all the shorts that are on right now. You're going to see a strong move that you could start to see. That would have come to fruition finally for the crypto, and it would get its just due. And keep in mind, it's been this massive lagger that nobody wants to seem to touch, yet all this other winners are out there. You'll see the rotation in. So yeah, I'm extremely bullish. I just want to see the darn thing to hurry up and get that out of the way and get banks to get on board and not stop fighting it. They'd stop fighting it, and then this thing can really start to take off.
Yeah, I'm in agreement there. I think I might even be a little more optimistic than the average folk when it comes to the Clarity Act, because even if they don't get the stablecoin yield included in that, or even all the tokenization stuff, what it fundamentally does, though, is it creates a baseline that's going to be very hard to go back over for the crypto market. Because as it stands right now, pretty much everything we have is just the SEC greenlighting it, just verbally saying, yes, crypto's good. We're not going to try to screw you guys. But if we can actually get some sort of legislation, even if it's just the bare bones stuff on the books, it's going to take another act of Congress to pretty much repeal that. And at that point, it's the gates are open. People are free to run, build what they want, get going with a real sure, solid guarantee for legal guidance that they're not going to get just randomly screwed over by the SEC if the administration changes. So would I love to see the stablecoin yield and tokenization? Absolutely. But at the same time, I don't think it's necessary to see a big win come out of this. But if we got all that, like you said, oh yeah, absolutely massive. It would, I think it's legitimately one of the things that could kickstart the market going back towards all-time highs pretty fast.
It would remove the final impediment,
That it would.
which is the banks fighting it.
Very true. Alrighty, gentlemen, let's go ahead and get out of here for the evening. Any final thoughts? Where can the folks find you? Tracker, what do you think?
In Telegram, man, it's where we are in there. Like we just laid it out for everybody here. Outside of that, Monday nights here, we talk about it. DJ Roundtable, we're still over there talking about some things. I know you were on a show last night talking about a lot of good stuff, so that's still all going. But yeah, just trying to keep on top of everything that's coming in. Once we can get these clarities out of the way and get some things moving, that's going to get exciting. Now we can start talking about various trades and things to move it in, speculative trades, positions. We can get into the different sectors of crypto, but right now it's just hold and see, wait and see. I mean, there's a lot of cool stuff I've been seeing with the different sectors in the crypto market, but it's kind of pointless to talk about until we start getting some movement. So once we get that movement, it'll get really interesting and fun again. Definitely agree. All right, Dace, final thoughts, sir.
Yeah, like just to echo what Tracker said again, like this stuff is boring and painful until it is euphoric. I mean, it happens quickly, and so this is something that I've lived through. Having been in the game since 2017, 2018, around there, and so yeah, look, stay involved, stay plugged in. Come join us on Telegram. You can find me at Dace Northall on X and at Instagram and on Telegram as well. But yeah, thank you guys so much for joining us, and stay tuned for more to come. It won't be boring next week. There will be more PPI data come in. There'll be Clarity Act results. There'll be lots more things for us to report on.
Well said, sir. Yes. Clarity Act, Federal Reserve, government shutdown, ? A lot of stuff coming up this week. Try to stay plugged in if you can. At least just try to catch the headlines so you know what's going on and you're not going to get caught by surprise. But outside of that, we will catch you guys all in the Telegram, and we'll catch you guys next Monday, 8 p.m. Eastern time for our usual stream. But until then, as our good buddy Moonpill Irrational Optics is saying, Glad to see everyone is surviving the snow. Stay safe, stay warm. We will catch you guys next week. Ladies and gentlemen, good night.